I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, great. Thanks for having me back on, Jim.
An interesting point. You said people in the real estate business were taught the Trump handshake back in the 80s. What is that handshake? What does it do?
Yeah, it's hilarious to watch this on the news and see it only now coming to forefront over the weekend. So the grip, slip, and grab is an actual handshake taught to realtors in seminars in the 1980s. Now, I just assumed it was a standard salesman's handshake. But maybe the fact that nobody seems to understand what's going on with how Trump is handling things, maybe I was misinformed and it was only taught to realtors. So the grip, slip, and grab is a way for any salesman to control his client. It puts the person doing the grip, slip, and grab in the power position of the meeting. It sets them up. It actually causes a psychological change in the brain to the person receiving the handshake that is so strong that salespeople can use that handshake alone to control a conversation or a decision-making process through it. It was so strong when I know my dad and I first tested it. The girls, it's not really something that women have used because the way they shake hands is a little bit different than men traditionally, and that's not a chauvinistic comment, by the way. I think women were far better real estate sales than men. But the dad and I both tried it back in the 80s, and it was so successful and also very uncomfortable to do, as dad and I both agreed, that we refused to do it. So the grip, slip, and grab is this. As you're shaking the person's hand, you grab their hand firmly with a large, your hand open as large as possible. People usually don't come to you shaking hands with their hands fully open. They're usually limp or they're partially open. When you have a fully open hand, it allows you to slip your hand all the way up into the person that you're talking to thumb. The web of the two thumbs can get matched up, and then you quickly grab the hand, and then you shake, and on the second shake, you pull the hand towards you, and you grab the person's elbow. Now, when we were taught this back in the 80s, like we were actually taking seminars where you paid to learn these things. So I'm sure that Trump was at one of these seminars, or what he heard about one of these seminars, and he learned it the same place that we learned it. And it's a very powerful thing. The only way to counteract the grip, slip, and grab is actually for you to let your hand go loose, so the person squeezing your hand on the grip and the grab, your hand actually is somewhat limp in theirs. And it's a very uncomfortable feeling, and they feel like they're hurting you, so they will open their hand and give away. Now, as a man, you have to be highly self-confident to let your hand go limp in another man's hand, because it really is a demonstration of dominance of two males shaking hands. Of course, you would never do this as a guy to a female in the sales profession. That would be, totally wrong. But two guys doing it, this is common. So what you're watching on television when Trump is grabbing a guy's hand, He's slipping into the web, thumb web to web, and he is then shaking once and then grabbing their elbow. You're seeing Realtor Speak 101, the classic grip, slip, and grab. So there you go, Jim.
What did you observe in Trump's activities with the Prime Minister of Japan and Prime Minister Trudeau?
Well, both of those individuals were put off guard, to be quite honest with you, and there is no question his dominance that he exuded over them. Like, I mean, although Trudeau, I mean, today was very eloquent, the moment his set speech ended, you could almost see I'm not going to use childlike, but a young man. You know, you're watching someone there who knows he's at a distinct disadvantage. He knows that his peer group, which in our case is Canadians, are watching him. He doesn't want to lose face with his peers, but he also knows he's in such an awkward position because the person that he's sitting there talking about is just overwhelmingly powerful compared to who he is. And I don't mean that physically. I mean position, self-confidence, whether Trump is a little bit arrogant, egocentric, that's irrelevant. To me, there was no question that was what was going on. Same thing with the Japanese Prime Minister. Everybody needs to understand that other than maybe China, and China still at this time still needs America too, everybody else around the world, you know, you kind of got to give in to what the Americans are saying, because today's world is driven by money, and the Americans have the money, and we want to, as Canadians, we want to export to the United States. So you can say everything you want behind the guy's back. If you're foolish enough to say it here at home, don't forget that those newspapers are read down in the United States as well. And we're just seeing to come to pass for all those people who laughed and said that Trump wasn't going to get his way, that these people weren't going to allow it. Believe me, the wall will be built in Mexico one way or another, whether it's through loss of jobs to Mexico, by the plants closing up. I mean, can you imagine a company spending $1 billion in a plant and already pulling out of Mexico? That's reality. One way or the other, that wall will be paid for from money coming outside of Mexico. But we as Canadians, what we've got to remember is, yes, we've opened our doors to all of these refugees, but Trump as a realtor, he wants to get his own way. He sees it his own way. It's black and white. And he also has the ability to negotiate. All of a sudden, when all Canadians, our passports are checked a little harder, our entry and entry out of the United States is becoming more difficult because of our immigration policies, all of a sudden you can start to see pushback coming from Canada here too. All I'm saying with those comments is nothing political by any nature. Strictly negotiation is all I'm speaking about here. You are going to lose negotiating the way these guys are negotiating against Trump. You will lose.
Well, going back to our real estate, the real reason why we chat every week, is Vancouver's real estate inventory growing?
Is inventory growing? Okay. So what you're seeing now is you're seeing the early stages of the panic set in, where people who were sitting on the sidelines in late in the fall, I think if you remember high headlines in a few newspapers out your way, the realtors even encouraged people to hold off listing in the fall, wait till the spring when the market was going to be a little busier, which on your show I think I stated was typical realtor speak and was the worst advice you would hear possibly being given back then, which is now being proven true. So those people now are realizing they've already lost value of their homes. They want to get out of the market before it collapses any further. They begin to come onto market. So you will see some inventory gains there. But at the other flip side of the coin is houses are harder to sell. So there will be also a greater share of the houses that come off the market So there'll be a balance that's going on here. The only time your inventory will grow substantially in this case is if people simply want to liquidate and get out of the market. Normally, people list their home for sale because they want to buy another one. That's the number one reason people list their home for sale. Very few people just want to liquidate. Certainly, demographics in British Columbia also are not receptive to having a whole people sell their homes to move into retirement homes right now. The way the home ownership market is split up in age groups, that is not an active component in your market right now. So you're going to see some inventory come onto the market, but you're also going to see a lot of inventory come off. What you're not going to see is the quality difference of what's coming on the market versus what's coming off. And that's where a lot of your house price correction won't show up in your listing prices or in your selling prices. What I mean by that is this. If someone owns a high-quality $1.5 million home, they will list it for sale. So this will be a home that's upgraded, the roof's in good condition, there's granite countertops. The house has been really, really updated. What we used to call in the car market, this would be called a concours home or a concours quality home. It's really a home in the top 10 to 15% of all houses in the market. Now, of course, that's in the price category we're talking about. So as those houses come on, the poorer quality homes, which have been selling in BC now for about a year and a half, they're still selling like hotcakes right now here in the GTA. Those houses start to come off the market because those homeowners are not willing to adjust their price low enough to make those inferior quality homes appealing enough to buyers that they will bypass the better homes at 1.5 and spend 1.4 or 1.3 on an inferior home, planning to upgrade it over time. That's what happens as a market begins its major part of the correction. And that part of the market is really hidden because unless you have the measure of quality going on, you won't even know about that for years to come because realtors never talk about it. You have to hire an appraiser and get them to be giving you an updated monthly price on a house. Where it is shown years later is in your market value assessments and your property taxes. So in the same way that you had those crazy 30, 40, 50% gains in property assessments this year being registered on properties as a result of lower quality homes selling for higher quality prices, the opposite happens is going on right now. So the market is now switching. So everything we told you about going in and getting your property taxes reassessed, this is why we told you you needed to go get your property taxes reassessed. We explained in your show somewhere between 80 and 85% of all homeowners in British Columbia, their property taxes were overassessed in 2016 for 2017 taxes. So that's the component of what's going on in terms of inventory, Jim. It's not only do the numbers of homes coming for sale increase, but the quality of home you can buy for your same home buying dollar is really going up. And those junks and teardowns that you saw selling last year at $1.5 million, $2 million are now sitting languishing on the market, impossible to sell. So that is proof of what we're discussing here in terms of the quality of what you're able to buy. Quality impacts the number of houses for sale, impacts the number of houses coming off in the market. So even though your listing inventory is growing, it's not growing to the number that you think it would.
What was the overall price drop January to January for real, and were luxury and ultra-luxury homes more affected than condos?
Okay, so later, tomorrow, the next day, you're going to hear the Canadian Real Estate Association will release their update for January. That is the one time that the British Columbia homeowners get to hear the truth like everyone else hears across Canada the rest of the year, where the average selling price is going to be quoted. Now, anyone who's listened to your show understands that when I say the average selling price, I'm talking about the average purchase price. So my firm, when we say average selling price or average purchase price, we know what that's measuring. It's not measuring the average house, but every other economist anywhere in the world, any housing analyst anywhere in the world, every housing bubble in the history of the world is always measured by changes to the average selling price, not by this mythological benchmark created by the Real Estate Board of Greater Vancouver and your other real estate boards out there. In January, the Real Estate Board of Greater Vancouver reported a 15.6% benchmark price increase year over year in January, the same time that the average selling price had dropped 19.2%. The 19.2% drop in average selling price was never reported in any media in British Columbia or across the country. That may change this week, or it may go unnoticed because maybe the reporters don't actually get the charts that the Canadian Real Estate Association publishes. I don't know. Maybe those are hidden from the press, or maybe the press are giving them, and the press has so little time to report they can't actually look at a simple chart to decide what's going on. I don't know what the problem is. All I know is this week you will be released the average selling price in Greater Vancouver dropped 19.2%. That will be released this week. In terms of what that means when we talked about a 27% drop, of course, we lead the market by months because we're already measuring what's going to show up in the sales stats months and months later. So when we said our 27% drop has already taken place, we know that that will show up in the sales stats when we look at both the average selling price and we look at the benchmark price and we look at the quality of home being sold at that time. So we know right now their 27% drop is inevitable. That is already done. It's passed. You're going to hear about it months from now. Yes, ultra-luxury class and luxury class homes have dropped more than 27%. And yes, the condominiums have not dropped that amount. What I mean by that is this. The discussion I had earlier about the quality of a $1.5 million house. You are still going to spend $1.5 million if you're qualified to spend $1.5 million, so the average selling price would stay at $1.5 million. Doesn't mean you're not buying a house that would have cost you $2.25 million last year, which is exactly what's going on. So we are looking at, there are some homes already in the Greater Vancouver area where they are looking at somewhere around a 40 to 50% drop in price already. So if you own one of those teardowns, which last year you got an astronomical price for, which this year is virtually impossible to sell unless you're willing to take half what you would have got last year, those houses are languishing on the market, and you can see them on and off in Realtor.ca before they're pulled off the market. Your condominiums, on the other hand, the quality change is a little bit harder to see because you also have new housing stock that's being added in. And any of the new homes that are being sold, new condominiums, where your per square footage is higher because the quality of the condominium is higher, you don't really see what's going on even though it's going on. I'll explain your condos this way. You sold 30% fewer condominiums in January in Greater Vancouver this year over last year. You do not see a 30% drop in sales without some kind of a drop in selling price. They're claiming selling price went up. What you're actually reading is the quality of home being purchased increased, even though it's a condo, the quality of condo being purchased increased. At the same time, you weren't paying as much money for it. So the underlying value of the houses has dropped even more. All of that's pretty much hidden from the homeowner. You know, if you're buying a condominium, you're probably going to own a house for the next 25 years. You're going to go through 3 or 4 realty cycles in your lifetime. You may not even know this is going on. Who knows it's going on are people who bought last year, because those people, when they go back into the bank, if they took a short-term mortgage and they go to get refinanced or renew their mortgages, and all of a sudden the word appraisal comes up, those people, that's where it hits home.
We'll have more with Ross Kay right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Ross Kay. Ross, how many people have received approval in BC for the government's $37,500 interest-free loan to buy a new home if they're first-time buyers?
I've heard a rumor that there's around 400 people who have already applied for the program or been approved for the program. I'll bet you, if you called up CMHC and you called up the British Columbia banks, because I'm pretty sure no reporter in British Columbia has made that phone call, and you ask them, did CMHC change their rules to allow a second mortgage to be registered on title of a high ratio insured property? I am pretty sure you're going to hear the words no. What I don't understand is, why has not a single reporter in British Columbia, like I could be wrong. So in this one instance, because this is not a data question, this is a legal question. Why hasn't a single reporter in British Columbia gone to CMHC and asked them if they're going to amend their rules to allow this BC only second mortgage to be registered on a CMHC insured property? Now, as far as I know, I have not read that issue, that being reported on anywhere. So let's say that we talk about there were 400 people pre-approved. First of all, are they going to be able to access the program? I'm going to tell you that, in our opinion, when we look at the legal perspective of how CMHC operates under, and we look at the potential of the program, pretty much you can be sure that nobody that with 5% down is going to be using this program. It's going to be people with maybe 10 to 15% down where they can maximize on it. Those people, if they were going to buy, Jim, they were going to buy anyways. All that's happening here is the poor, old homeowner paying property taxes in British Columbia, and the poor British Columbia minimum wage earner is going to supplement those first-time buyers who are going to buy a house anyways through a credit on the interest. Those first-time buyers now are no longer going to have to pay. This program in no way will move any single buyer forward, regardless of what any single buyer mentions in the news to support the BC Liberals, or regardless what any of the realtor associations try to pull off as suggesting, oh, the first-time buyer market's getting hot. We're going to have bidding wars. The condominiums are going to start selling again. It's going to set off another frenzy. Commissions, 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 commissions. No, sorry, realtors. Your commissions are really going to remain 60% lower this year than what you were getting last year. You're going to have a 60% lower income level. And in my opinion, you deserve it after the bad advice you gave all those British Columbia homeowners over the last 2 years.
So this deal isn't causing condo prices to rise in bidding wars?
It is just a bunch of hogwash. Again, has one news reporter, Jim, have you heard one news reporter who interviewed a bank where the bank said, yes, we will be able to register a second mortgage on a property we insure with CMHC? Did you hear that in the news? Did you hear one chief risk officer of a bank, who rules the bank, by the way? The chief risk officer tells everybody else what they can and can't do. Have you heard one chief risk officer admit he's going to encourage his bank to accept a second mortgage on a property with only 5% down? Have you heard that, Jim? Have you heard one lawyer interviewed, one representative of CMHC, one representative of the BC government interviewed, where they verify that this program is going to be approved by CMHC, even though it is, you cannot do this anywhere else in Canada? In other words, for the first time in history, is BC going to be treated differently by CMHC than every other province? Have you heard that, Jim? No.
Are banks lending recklessly in the Toronto market?
Reckless is beyond compare. We were looking at housing selling prices last week. Now, hold on to your socks. This is 100% verifiable fact. Houses, single detached homes in my home city of Burlington here on the outskirts of traditionally what was called the Greater Toronto Area. So my Burlington is the outer perimeter market of the GTA. We watched houses sell last week, hold on, 67% over their 2016 appraised value. What the house was appraised at in 2016, it sold this year for 67% more. We just did a random sample of 5 single detached homes. None of them sold for less than a 50% drop in 1 year, increase in 1 year. That's, if you also looked at went to realtor.ca today and you went to Burlington, zoomed in with the mapping feature, and then you changed your criteria to single detached homes between 800,000 and 1.2 million, you're going to see virtually nothing is for sale. So in other words, if you live in Toronto and you sell your single detached home for, $1.5 million, 2 million, thinking you're going to move out to the suburbs, you're going to drive out to Burlington. Actually, it's going to be your real estate agent who drives you all the way out from Toronto, all the way out to Burlington, in a market they have never sold a single house in their entire career in. And they're going to show you the property at 900,000 in Burlington here, and they're going to say, wow, what a great deal. This would have cost us $1.7 million, $2 million in Toronto. Yeah, let's put an offer in on it. Without realizing they're actually paying 50 to 67% more than what the house appraised at last year. That's what happens when you get into these real estate markets. The question I have is, how is any bank approving that mortgage? How can a bank approve a mortgage on a property that sold for 67% more than what it was appraised at 1 year before? It is impossible to do that with everybody understanding with what's going on. Somewhere along the line, either the chief risk officer at the bank isn't being told, the appraisers are being asked to drop the CUSP definition of appraisal from the appraisals they are submitting to the bank. The banks are using a robo-appraiser. In other words, it's an automated valuation model instead of a appraiser walking into the property and doing the job that they really love doing, telling the truth about what a house is worth. Or they're relying on CMHC's Emily for evaluation, which is solely based on what the last home down the street sold for. Yes, there is really lax lending going on in the Greater Toronto area now for about 19 months.
Ross will be updating all these stories in a week. thanks very much for chatting with us.
Thanks a lot, Jim, and thanks for having me back.
My guest has been real estate consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HowStreet.com radio. Find us on YouTube at Talk Digital Network. Find us on Twitter at Talk Digital Net. Questions for the show can be sent to info@HowStreet.com. And as you heard, many of those questions that we asked today were listener questions. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.